Welcome to week 8. I am Prakash Choudhary, a NISM-certified research analyst, and you are watching Market Insights by Prakash. For the past 11 sessions, starting April 23rd, Nifty and Sensex is consolidating in a tight range of less than 3%, searching for a breakout in either direction. But if we look at the weekly chart, Nifty and Sensex gave two consecutive green candles indicating some strength in the market. Sensex closed above 50-day moving average after falling in last two sessions, while Nifty managed to stay above 20-day moving average and 50-day moving average. The big story this week isn't just the price, it's the absorption. FII started the week on Monday with a show of strength, buying 2,835 crores. However, that conviction didn't last. As crude oil and geopolitical tensions rose, they turned into aggressive sellers, pulling out more than 11,071 crores over the week. So why is the market green? Because the domestic story is winning. DIIs have pumped over 21,392 crores into the market in the first week of May alone. This is structural resilience at its finest. Let's look at the sectoral winners. Auto leading the pack. Strong Q4 volumes from Maruti and Bajaj Auto confirm that domestic demand is holding up. Chemicals and realty. This confirms a broad domestic economy trade. Investors are betting on India's internal growth story despite global volatility. Pharma and healthcare. This is strategic positioning. Institutional money is moving into the pharmaceutical export space ahead of the India-US trade deal. The laggards were PSU banks, still digesting the RBI's ECL framework and SBI's Q4 NII miss. Oil and gas, a surprisingly contained decline given Brent crude volatility. While high crude oil prices hurt OMCs, the upstream players like ONGC and Oil India are acting as a partial offset. Now let's look at the list of top gainers and losers stock-wise. In the individual stocks, Nuvama Wealth gained 22% and CAMS gained 14%. The logic is clean. As SIP inflows hit record highs, the companies that manage and process that wealth are undergoing a massive re-rating. Coforge with 18.55% gains is actively decoupling from the broader weakness in the IT pack, driven by a blowout Q4 FY26 earnings report that aggressively beats street estimates. The sustained surge in Yes Bank of 14.73% indicates the market is finally willing to re-rate the lender, officially transitioning its narrative from a distressed asset to a stabilized private bank with strong Q4 numbers. While for losers, a warning sign. Look at Voltas and Blue Star. Even with a record summer, they are being sold. Why? Because the market is reacting to Labour Ministry's heatwave advisory. This signals execution delays and margin pressure. Smart money is selling now before the Q1 results hit in July. Always look ahead, not just at the current weather. Dalmia Bharat, the cement major, is seeing profit booking as the market reacts to a noticeable sluggishness in volume growth, compounded by delays in their execution timelines. KPIT Technologies, caught in a perfect storm as a pure play automotive software provider, it is being weighed down by the broader IT sector correction while simultaneously battling negative sentiment surrounding the global slowdown in electric vehicle adoption. Dixon Technologies. The core narrative driving the sell off here is margin vulnerability. Dixon is facing a classic margin squeeze where rising import and component costs are eating directly into their traditionally thin bottom line. We have four critical policy updates coming up next. But first, if you value this level of deep dive analysis, please take a moment to subscribe to Market Insights by Prakash. Your support helps us keep these data backed briefs coming up every Saturday. Now, let's look at the rules changing the market. Four updates that directly impact your money. 1. SEBI's landmark circular. SEBI has formally brought 48 significant indices, including the Nifty 50 and Bank Nifty, under its direct regulatory umbrella. This ends the era of discretionary changes by index providers. Your SIP benchmarks are now formally regulated and transparent. 2. Bond yields. The 10-year GSEC rose to 6.96%. If this breaches the 7.1% mark, expect valuation pressure on high growth sectors like IT and real estate. 3. Operation Sindoor anniversary. While military briefings this week confirm the success of India's indigenous defense systems, names like HAL, BEL, and Zentech are no longer just talks. They are strategic national assets with a proven supply chain. 4. Crude at $100. With the US-Iran ceasefire under threat, Brent crude is back in the danger zone. Above $110, we shift to a defensive portfolio. Below $90, we rally. India's internal growth is currently stronger than the global noise, but we must stay vigilant. That wraps up our intelligence brief for this week. Thank you for tuning in. Don't forget to like and share this video with a fellow trader. I am Prakash Choudhary. Stay disciplined, and I will see you in the next update. Thank you.